My name is Matthew Todd, and welcome to Inside the Scale Up. This is the podcast for founders and executives in tech looking to make an impact and learn from their peers within the tech business. We lift the lid on tech businesses, interviewing leaders and following their journey from startup to scale up and beyond, covering everything from developing product market fit, funding and fundraising models to value proposition structure and growth marketing. We learn from their journey so that you can understand how they really work, the failures, the successes, the lessons along the way, so that you can take their learnings and apply them within your own startup or scale up and join the ever-growing list of high-growth UK SaaS businesses. Hey, welcome back to the podcast. Pleased today to be joined by Ed Halsey, COO, co-founder of Taveo. Great to have you here, Ed.
Great to be here. Thank you very much for inviting me.
No worries. I'm looking forward to the conversation today. I'm looking forward to finding out a bit more about Taveo, a bit more about the journey as well. But do you want to kick things off? Just give people a brief intro into who you are and what Taveo is all about.
Yeah, absolutely. So Taveo, or the artist formerly known as Hub, as we're branding it, is a rebrand of the former business. Still doing exactly the same thing, focused on delivering transparency, efficiency, and value in the commercial broking space. To start with the customer first and work backwards, deliver them the things that they actually need and want, and price accordingly.
Nice. No, sounds interesting. But why get into founding Hub, now Taveo, in the first place? What was the pain point? What was the opportunity? What led you to take that leap in the first place?
It's a really interesting story, really. So Mark, my co-founder, and Mark's been a broker his whole life. I was an underwriter for the start of my career, and then I don't call myself a technologist because the true technologists would cringe, but a seller of technology into the insurance industry. And we met one year after Bieber. We were having a coffee together, and it was a coffee after Bieber, and both a little bit disillusioned by where we were at and what we were doing. Mark felt, from a broking perspective, like there just had to be a better way of doing it. It was so inefficient, so slow, so admin heavy. And all we saw was more and more cost for all those inefficiencies being piled onto the end customer. Out of control commissions, but service that was largely deteriorating. From my side, I was seeing a lot of things when I was an underwriter that I was kind of like, that's just not in the client's best interest. Getting phone calls being asked to, no quote risks. Well, I haven't even looked at it yet. I don't know whether I want to quote it. Oh, well, we're not going to move it this year. Well, that doesn't sound like that's in the client's best interest. That sounds like what you want to encourage them to do. But actually, there might be better terms in the market. There might be a better price. So things that had become normalized that really shouldn't have done. And we started talking after Bieber one year, and we ran out of reasons that we couldn't do this. We kept saying, well, what if this? Yeah, you could do that. Use this. What about that? Well, yeah, there's no reason you couldn't do that. We just need to build this bit of technology. And there was we had an answer kind of for every question, which, as anyone who knows me and Mark would say, is we've always got an answer for every question. That's how we both are, but ran out of reasons not to do it, and felt quite impassioned by the mission to really reinvent how insurance was being done and take away all of the old legacy technology and start thinking about every single stage of the insurance process in a new, innovative way, tearing up that we've always done it that way, and just thinking, how can we optimize this to within an inch of its life? Every single part, every single person. And thus Hub at the time, and now Taveo was born.
And what were some examples of those legacy practices, systems, processes, behaviors, etc., just to give people a bit more context, a bit more of an idea about what you're talking about here?
Yeah, I think it's for me, it's about manual process first and foremost. As the Future of Commercial Broking study told us, up to 63% of a broker's day is spent on admin. These are brokers who earn good money, not admin assistants on £15,000-20,000 a year. People on good money spending as much as 63% of their day. Now let's add in how much of an insurance broker, or specifically an account executive's time, was, not sure so much so after COVID, but certainly was spent hacking around the M25 in a BMW. So travel, admin, how much of it's actually spent advising the customer, talking to them about risk, and how much of it is sat saying to them, please, could you spell that phonetically for me, on their name or their postcode or whatever it might be. Low value interactions. So how do you automate all of that? And then if you automate all of it, how much quicker can you do it? And how much less resource do you need to assign? How many more clients can an individual manage as a result of it? So if we look at our numbers at the moment, we're tracking around each member of staff or each FTE that Hub has or Taveo has. I'm going to slip up on that quite a lot, having only just made the name change this week. But having only just looking at that, the amount of premium managed per employee is tracking around 1 million. So £1 million of gross written premium per employee, which is a staggering amount when you compare it to many of our peers who are more, many of them are in the sort of £200,000 bracket per FTE. So yeah, managing as much as 5 times what many of our peers are, which shows the efficiency. And that's everything from really simple things like when the customer comes on, what's the name of your business? And it immediately goes and finds as much detail from the web as it possibly can about that business. So what's the full trading name? What's the company name? What industry do they work in? Who are their directors? Have they ever been disqualified from being a director before? Tell me about them. Let's do a credit check on the business. So all of that stuff happens instantaneously on that first point. And then you're only asking them about the stuff that matters. Don't get me wrong. You have to validate that information with them, but you're not asking them painfully to spell out their address. That in itself makes onboarding a much slicker process. So that's part of the automation. Then we're also looking at things like, for example, the chronic problem we have in the industry at the moment with underinsurance of property, commercial property. RICS actually have it somewhere around 80% of commercial property is underinsured.
Wow.
I mean, we talk quite a lot about the fact that we are trusted advisors. Now, if you look at the future of commercial insurance broking, which I'll probably mention quite a lot during this as a study, but that study actually said that clients disagree. We've actually got a bit of an identity crisis in that we call ourselves trusted advisors. They consider the whole thing to be very transactional. The stats around how often most people speak to their insurance broker, which is the vast majority speak to them once, maybe twice a year, and that twice probably a game of golf. Once or twice a year. It's not advisory. And then we talk about trusted, and it's not trusted. Or if it is trusted, it shouldn't be, because 80% of commercial property is underinsured. I would challenge the whole concept of trusted advisor. And I think it's because it justifies a lot of the fees and charges and commissions that we're charging to the end customer and that we're taking or asking for from the insurer. It justifies all of that because we're there saying, we're a pivotal part of their business, not we just facilitated them buying insurance, which is in the vast majority of cases, particularly in the S and the M, in SME, less than the E, it is in fact the reality.
And how do you go about changing that when many people, purchasing those policies probably don't understand everything to a greater depth as obviously you do, and don't appreciate, whether that is, a good advisory service versus just transactional versus that, a necessary evil?
Yeah, I think engaging the customers. I mean, for starters, it's a bit of a challenger sale. Because if that's all they've ever known is that, that's just how you have to buy insurance. Yeah, it's a pain. Sometimes you have to call out that pain and say, you realise you're spending this much time on it, or you realise you're spending this much money on it. Does that, it's almost validating that with the customer and saying, on your policy last year, you paid 30% commission went to your insurance broker. Have you asked your insurance broker what you paid? And then just saying to them, so of your insurance, 30% went on the advice piece and 70% went to the insurer for the actual insurance that you bought. Does that seem a fair reflection to you of the service you've received? And if they turn around and say, no, that doesn't remotely seem like it, then you say, okay, so what does seem a fair amount? We actually did a study ourselves of 1,000 business owners and asked them exactly that question. We said, typically, of your insurance premium, how much do you think you are spending on the advisory piece with the broker? And they said 5 to 10% commission. Now, this is across all classes of commercial business, but 5 to 10% was what they said. Yeah. And we said, and what do you think would be fair for the amount of advice and service you're receiving? And they said sub 5%.
Right.
So if they actually, the reality of 30% or 25%, whatever it might be, or some that, we know some that go up to over 50%.
Wow.
That they're paying in commission just for facilitating you buying insurance. If the customer becomes aware of that, there will be a big change in the market if it is proactively disclosed to them rather than waiting for it to be disclosed, as I think we should be doing. I think we should be proactively disclosing where possible. Then I think the whole market changes overnight. The problem is no one really wants that to happen because there's such technical debt and financial debt in play that people need those commissions to stay high. Because if they have to drop down to 5, 10%, no one's making any money because they're running those books so inefficiently with so little technology to back them up on legacy platforms with really high customer acquisition costs and distribution costs. So there's no real incentive for anyone to make anything change because they like it quite how it is at the moment.
Yeah, no, that makes a lot of sense. I can certainly see how that would be the case. So with those frustrations, then running out of reasons you couldn't or shouldn't do it, then how did you get this off the ground?
So we really started at the end, really. We started at the end and worked backwards, which was we started with the customer. We said, what does the customer want? Fundamentally, what does the customer want? And it's pretty clear from just about every study and conversation with a customer that's ever been done. They want the right cover, and that's important when we look back at the commercial underinsurance. They want the right cover at the best possible price as quickly as possible. The as quickly as possible is a nice to have. Reuters found that, fundamentally commercial or personal lines, they want the best possible price. So if you start with that theory in mind, you say, okay, best possible price they want. How can I affect that? How can I affect the price? Well, the insurer's price is what the insurer's price is. You can make the risk better. You can present the risk in its great light, but some risks you can't present them. You can't present them in a better light than they are. They are the reality. But it's all about giving as much. You give as much information, but you can't change fundamentally what the risk is. And every client, every broker is pretty much going to the same market, so they have access to, and getting the same price from the same underwriter on the same risks. So there's no differentiation there. That's just, so how do I make it cheaper? It's not my product. Equally, when we look at the combined operating ratios of most insurers, there's not a lot of scope to bring down the pricing an awful lot more than that's at already. It's not like there's tons of fat in that with some of the CORs we've seen, although the shift in the market recently is probably much needed. So how do you do that? Well, the one thing that we can affect is how much we need to take for our part in that transaction. That's the one thing we can. Now, the only way we can affect how much we're going to take from it, or certainly that we can take significantly less than our peers and still be profitable, still be in business, which 3 years on, we're still here, still alive, still kicking, still making money. The only thing that we can do to affect that is to optimize our business as much as possible so that all of that transactional stuff, all of that petty admin is essentially eradicated, so that we're only focusing our experts and our technology on high value tasks, and that everything else, wherever possible, is either automated, or we can give the option of self-service, or it's using AI to facilitate all of those different technologies to make us the most efficient broker we can possibly be. And then more of the customer's money is being spent on actual insurance and not on advice that they never use. I often compare it to a la carte dining versus all-inclusive. So when you go in, or all you can eat, should we call it, in a restaurant, compare it to the two, we believe in a la carte. So, digital when you want it, human when you need it is the tagline. But what that's about for me is giving the customer what they actually want and what they actually need at that moment in time, not a promise of endless service that could just be, you can call us 1,000 times and we're going to, because then you get charged for 1,000 times. You get charged as if you're going to call them 1,000 times, when in reality, you probably won't. You probably will, as the stats show, call them once or twice a year for a bit of advice on something. So let's charge proportionate to the amount of work that a customer is going to be, rather than charging them based on kind of this all you can eat or fully consumptive model where they can just use as much as they want and we have to charge for it. The reality is that's how it gets looked at. But the reality I personally think is the customer is paying for the inefficiencies, not really for the service that they receive. I think they're being asked to foot the bill for the high customer acquisition cost to get them as a customer in the first place. The cost of putting them through legacy technology and what that does to the business and how much that costs them, the high human resource cost of putting that through, and the cost of people to manually administrate it. And that kind of needs shifting. That needs to be, pay for the insurance. You're here to buy insurance, and the advice should be secondary to that.
Yeah, no, absolutely. And yeah, when you describe that, I guess a couple of questions come to mind, and one of which is, does that mean you need a pretty big reach, distribution level of scale of client base to make this work? Or is it simply that you are disruptive enough in your technology and operational efficiency that means that you're just leaving those traditional legacy brokers way behind because of the level of inefficiency they've got built in?
Both would be my answer to that. Yeah. Both of you said. I think the second one is really important. If you are 10 times more efficient than your peers, and you work at 50% of the fee that they work at, then you're making more money than they are proportionately. That's just how it is. So I think the efficiency part is vital in that. We want our staff doing valuable things. We want them helping, advising customers, working with them, identifying underinsurance, identifying risk, making sure that they're comfortable, talking them through the quotes that they've got and their options and the like. So we take away all the petty admin to let them do that. I think that's the first point. The second point is, when you talk about the model and needing scale, I'm going to point back to the analogy that I used just then about a la carte dining versus all you can eat. All you can eat, you don't know what the customer's going to want, and you've priced on a worst case scenario. And what you then do is, as a result of that, if you're a restaurateur, and sorry if you're not a restaurateur who does this and you've got amazing quality of food, but the food quality drops as a result of it, because you go, I'm not going to give them lobster, I'm going to give them chicken, because I don't want them to have all you can eat lobster, because that's really expensive and that's not going to cut the margin. The beauty for our model is, with the efficiency and with the cost savings that the customer sees, it's more like a la carte, because we're looking at them and going, okay, these are all the ingredients that they're going to need, and this is the cost of those ingredients, and therefore we need to put this margin on top of it, and this is the service we can provide. So it's actually modelled far more efficiently than something that just goes, we don't know whether they're going to call us 100 times a year or once. And actually we've taken out all of the other part of it. We're not, it's just, as we're calling it, insurance optimized.
Yeah, that makes a lot of sense. And I think that's, the thing that technology is very, very good at, and, recent advances, AI, etc., only serve to make even better. It's good at delivering at scale, but retaining an excellent level of personalization above and beyond what an equivalent human-only workforce could provide, right? So you get the best of both, don't you, by introducing better technology, more disruptive technology?
Yeah, I think it's not about, for me, it's not about replacing humans at all. Humans are incredible. They can do things that computers absolutely cannot. They can empathize. They can advise. When you have an insurance claim, you want to speak to a human being, not a chatbot, for example. Yeah. For me, it's about getting them. No one likes doing admin. No one enjoys admin. I don't think I've ever met anyone. They're probably out there, but I've yet to meet anyone who enjoys doing admin. someone who's trained as an insurance broker or someone who's trained as an underwriter, they want to be broking, they want to be underwriting. That's why they came in to that position. So it's about taking all the stuff away from them that they don't want to do, the stuff that they consider to be boring, that they consider to be repetitive, taking all that in. And then rather than replacing them, for me, it's about kind of having a robo assistant with you. It's about augmenting them so that they can do more with the time that they've got, and they can focus on the things where they can really make a difference, the thing where only a human can get that end result. And that for me is the optimization part. It's the augmenting of staff with technology to make them better at what they do.
Yeah, no, I absolutely, completely agree. You've got to have that balance, but ultimately, as you say, it does leave people doing the high value tasks that they most likely enjoy a lot more than the admin stuff, right? And I'm kind of curious as to how, especially if you're talking about commissions, talking about transparency and customers realizing what they're paying, how are you kind of perceived in the industry where those legacy brokers have those inefficiencies in their business? Are you getting a lot of pushback from that side of things?
I shouldn't imagine we're very popular.
Yeah.
We've often joked that with the new branding of Taveo with the big V in the middle, that it looks like a versus. It reminds me of combat sports, A versus B.
Yeah.
I think it reminds us that we aren't going to make a lot of friends with other brokers. I stress within the insurance industry, but for insurers, we're going to make a lot of friends, and we already have made a lot of friends because they look at the model that we've got and say that is absolutely the future we want to see. We want to see fee-based insurance. We don't want to be paying commission. We want the customer to know how much they're paying for their actual insurance product, not what they're paying for the overall service. They want full visibility of that. So we'll make friends in some places. We'll have a more challenging relationship with others who maybe don't want this model to succeed, and that's just natural. And I think we're not scared of that. We're happy to go head to head on that because we think this is the way that things need to go. We think this is in the customer's best interest. We think we have the moral high ground on that point, and we think it's an important change for the industry because we can't carry on in the direction we're going. We're in the middle of a cost of living crisis. Businesses are at risk because they're criminally underinsured, as we've seen with this, under 80%. That means the vast majority of businesses, if that property burns down and average applies, they'll never rebuild it because they won't have the 80% that they need to be able to make up the difference on the claim. They'll just lose their business overnight. They almost might as well not have bought the insurance. I wouldn't encourage that, but they almost might as well not have done. Such is the deficiency of the cover in place. So I think it's down to us to always look to be changing. We should always look in any industry to be optimizing. Every other industry does it. The lack of speed and agility that we have as insurance is something that we need to address. Why is this constantly what's been talked about? I've been in the industry for 20 years, and we've always said the same things. Oh, everything moves quite slowly in insurance. Oh, we've still got this legacy platform. Oh, we're hindered by this, that, and the other.
Yeah.
We need to change, and we need to change fast in the way that other industries have. The study that I mentioned that we'd done of 1,000 business owners kind of summed that up, that particularly with brokers, I mentioned trusted advisor. And when we asked them, how much do you trust your insurance broker? The average score we got back was a 6. A 6 out of 10 for trusting that their trusted, self-anointed, trusted advisor was doing the right thing by them. And I think that all comes down to the transparency piece and who have you approached on my behalf? What markets have you been to, and how have they responded? Being able to have a far better view of what work is being done on their behalf, and having. I think back to when I sold software, and one of my bosses said to me at the time, he said, "Oh, we want to go international with our software. We want to sell this internationally." He said, "So you're going to need to start traveling internationally." I said, "No, I don't." I said, I can do this remotely. He said, well, how can you do it remotely if you can't get in front of someone and look them in the eyes? And I said, it's a really simple adjustment. It's rather than looking them in the eye and saying, I want you to trust me, which is what we do when we go face to face. We ask them to trust that we're doing right by them. You show them why they can trust you. You demonstrate rather than tell. You actually show them the piece of software working bespoke to them with their branding on it, so that they already know that it works. They already have that level of comfort. It's just an adjustment in the way you do it. And for Taveo, we're looking at it in a way that it's a bit like an open kitchen. When you go to a restaurant, I'm obviously hungry today because I'm talking a lot about food analogies.
That's what
it's like an open kitchen where you can see everything going on in the backdrop. We have this open back office that we've built, and the open back office is first of its kind in the industry, where all of the correspondence between all of the email that goes back and forth between you and the customer and with the insurer, and the phone calls that you have with your broker, all of it is recorded in your client portal for you to see it. That's the level of accountability we're willing to have for what we've shown customers, and what we've said to customers, but also what's going on. So they don't need to trust that we've shown them all the quotes. We'll show them the quote going out. We'll show them the response coming in. We'll show them the answers to any objections that the underwriter might have had. It'll all be there for them to see. So there's really nowhere for us to hide. We're not asking them to trust us. We're showing them why they can.
Yeah, I think that's a massive difference. And often those face-to-face scenarios, you say you're asking someone to look you in the eye and trust you. I think part of it is building trust, but I think part of it is also them not being uncomfortable saying no in those situations as well, right? So it's quite different type of trust, isn't it?
Yeah, absolutely. It's just showing rather than telling. If there's one thing that score of 6 out of 10 shows us, is that it isn't working the way it's being done at the moment. They don't trust. And how can you trust something that you can't see? Yeah. It requires a huge leap of faith. And unfortunately, in the insurance industry, with what we sell, it's a very unique sell. It's a grudge purchase. No one goes, oh, I'll tell you what, Jim, I've just bought an amazing insurance policy. They're not down the pub boasting about it, or it's not sat on their driveway, or it's something that they only know that it was good at the last possible worst moment, which is when they have a claim. Was that thing? And most people don't have claims. Like most insurance will not have a claim on it. That's the reality. So most people don't ever know if what they've bought is going to be right, fit for purpose, until it's too late. And then sometimes they'll find out, oh, brilliant, it was exactly the cover I want. Hopefully the majority of times. And other times they'll find, oh, there was that clause in there that I didn't really know, and that's what's happened, and now I'm not covered for it. That's a really dangerous position to be in. So, that's what I think we need to. That's really what I think we need to resolve.
Yeah, absolutely. And I think the trust and transparency values, what you were talking about just then, with that transparent back office, seeing the communication, seeing the work that's done on their behalf, that's a pretty, decent level of transparency. Genuinely, you're not hiding behind anything there. You're not just saying, oh, by the way, we're charging you this, the other people don't tell you. You're actually showing the work that you did for that as well, which I think is super impressive.
I think it's justifying, so you can see that, actually we didn't just forward you in terms. Here's all the emails that went out on your behalf, and here's all the quotes that we actually went, not just the ones we wanted you to see, because that's the other thing, is it's about, showing them what you want them to see, them not necessarily, and we don't believe in that. We're like, no, we'll show you everything, warts and all. We'll show you that amazing quote that we knew you'd take because it's like the best wording and it's £1,000. But we'll also show you, for context, that company that came back with £10,000 as a quotation, and why they came back with £10,000, so that you can understand better. Because I think we miss a trick in some ways. We kind of just show them the 3 best quotes that we've got and don't bother to show the big ones. Actually, if they could see the range better of, here's the 10 markets we went to, and this one was 10 grand and this one was 1, suddenly the 1 feels even better. Yeah. You feel like you're even more comfortable with it because you realise what the worst case scenario could have been, and you get that wider range. But I just think if you're not doing anything untoward, if you're always acting in the client's best interest, why would you not be willing to share that with them? Why would you want that hidden away? And there are certain things we need to. You can imagine certain things that can't be shared. But of those, all of those things that are about them and about what you're doing for them, why can you not share that with them? Why would you not want to?
Yeah, absolutely. When you ask that question, it's hard to, if not impossible, to argue against that, isn't it?
Yeah, I think so. I think transparency is the one thing that we need more of in our industry to help customers understand what they're buying and the value of it. I think we need to do a better job of selling what it is that we provide, and that it is the right cover and why that market is the right one. I think quite often, because everyone's in a rush, because everyone's got so much work to do, because the processes are so slow and clunky, there's a lot of corners that we cut as an industry. There's lots of things that we don't do that we really should do, or things that we don't spend enough time on that we should. For example, the initial capture of information and actually talking through the risk with them. Oh, just send me a schedule from last year and I'll get you a quote on that basis. Actually, what really is this risk? A chap, when I was an underwriter, Frank Such, lovely chap, worked for him for several years. And he said to me one day, Frank said, if you can't picture the risk in your head and walk around it, don't put a price on it. He said, as an underwriter, it's for you to understand the risk and get enough information from the broker, from the presentation, from whatever sources you can, that when you're putting a price on a risk, in your head, you can walk around that risk. And you can imagine what you would be seeing, where the state of the warehouse, or the condition of the woodworking machines, and what protective equipment they're going to have, or PPE they're using, all of those kind of things, and have a real feel for it. And I think that's true. That's the thing that we should be doing, is really understanding it and spending time on that stuff, the stuff that matters, not the petty admin around it, writing 15 emails to 15 different insurance brokers to send it out, or double keying stuff between one of your legacy platforms and your core platform and wherever else it might need to go.
Yeah, absolutely. I think there's a lot that any other business owners should take from this in terms of values, in terms of transparency. I'd ask anyone listening to apply that to your own business and question how you're delivering to clients, how you're selling to clients, and whether you genuinely can have that same level of transparency to demonstrate that you are acting in their best interests. But yeah, no, thank you for sharing that. I think that's super, super interesting and a lot to take away from that. But switching back to the rebrand, you've talked about the rebrand a few times, Taveo. I know you're only just going through that rebrand at the moment. What's the motivation behind that? Why rebrand?
Well, I think I've already got a few fines from the team now for using the wrong name on this call alone. But for us, it was part of growing up. We always knew we were going to need to rebrand. We always felt that was something we were going to be doing, and we felt that now was a pivotal moment for the business and what we've got planned next. Where we wanted to go from that kind of those awkward teenage years into full-grown adulthood, something a little bit maturer as a brand, something that said more about who we now are from where we were, when we started 3 years ago, which I think that changes more in your first 3 years as a startup, everything you stand for and all the things you've tried. And, you've got so much flexibility to do stuff when you first start up. That it stuff does seem to, you're in a constant pirouette of pivots to make sure that you're getting the right things and bringing in the right technologies and phrasings and all of those kind of things. So for us, it was about we now know who we are as a business. We know what we stand for. We know who we are. We know what our mission is. And largely the name came about wanting to own our own in all sorts of different industries, including our own, even similar names, Chubb as an insurer. So owning your own name for us was a really important thing so that we could build brand recognition, so that we
Yeah.
could stand for something, and so that the word Taveo could mean something in the insurance industry uniquely. Whether that's anything from, ranking number one on Google for your own name, which is very hard when you're called Hub,
Yep.
to actually a chance to look at everything we've done to this point and really assess who we've become. And largely when we were trying to come up with, Taveo it means nothing. It is a meaningless word, in terms of it doesn't translate directly to anything. However, for us, it became that we looked at lots of letters that we wanted to put in, things that were important to us. So it's not to say it's an acronym. It's not an acronym. But when we were coming up with the name, we threw words into the mix like transparency, efficiency, value, AI, automation, optimization. All of those words start with the letters that you see in front of them. And I think there was a nice story for us about that V in the middle, and it being quite, we recognize that we're quite combative. We're trying the exact change that other people aren't going to want to see happen. And equally that we've got that V at the center, because for me, it's all about, as most people would say, it's all about putting the customer at the center. For us, it's about putting value at the center of everything we do. Are we delivering value to the customer? Are they getting value from the service and products that we are delivering to them? Because if they are, everything else falls into place from there. If the customer is getting and feels as though they are getting value for money from the product, then everything else has to have been right. The onboarding has to have been good. The product has to be right. The claim service has to be right. So we've put value right at the center of everything we do. And that was really what prompted it. It was a chance to, reset, evaluate what we'd become and where we were headed, and make sure that we had all of the foundations in place for what is going to be a very exciting next few years.
No, absolutely. It makes a lot of sense. And I can certainly see how you want that name, that brand, as something that you own, you control, and can get out there into the industry, into the world. And I think it's a very strong, striking brand. The website, as I said before we started recording, I think looks really, really powerful, definitely disruptive. Excited to see where you can take the brand Taveo. What are your plans now going forward to take the brand forward? What are your ambitions?
So the goal for us has always been the same in the short term. The short term goal is we identify a class of business where we think there's opportunity, and we optimize the life out of it. That is the simple view of it. So we choose a class of business, we get all of our question sets optimized, all of our data sets optimized, all of our documentation, we train all of our team, we write all of the marketing material and set all of that in a particular class. Now, don't get me wrong, there is a broader strategy beyond that on business insurance as a whole, and we bring in all different types and write all different types of business. But the plan is to go class by class by class. So at the moment, we're about sort of 5 or 6 classes into that of business, and the plan is to get the full suite of business ones all fully optimized so that all of them have got that same journey I explained, where the customer makes contact and we already know 70% of the information about them before we've even spoken to them, before they've even opened their mouths. We know 70% of what we're going to need to know so that we can spend quality time on that important 30%, which is risk management, understanding how their business operates, understanding where the threats are to them, and talking them through that.
No, amazing. Sounds like a very clear direction, a very clear plan, and all based around, as you said many times, delivering that value and transparency to the end consumer.
Absolutely. Yeah. And I think the third one being just efficiency. We have an ethos in the business of, if you're doing it more than a few times a week, flag it. If you're doing it 10 times a day, let's fix it now, because we don't want anyone doing anything repetitive 10 times a day, because frankly, they should have better things to do. And if they haven't, we've got much bigger problems than pressing the same button 10 times a day. This isn't lost. They're not in a bunker. We don't need them putting in 15 numbers. That is a really niche old reference, but anyone who watched it will get what I mean. We need people working on the really high value stuff.
No, absolutely amazing. And thank you for sharing that. And I look forward to seeing what you're doing with Taveo and how that goes under the new brand. But is there any advice you'd like to leave our audience with? Anything else? I think we've covered off some really, really valuable points around value and transparency, but anything more immediate you want to leave people with before we wrap up?
I think it would probably be a point around innovation. And I think it's I think for me, it's where we've gotten wins is don't let people tell you, oh, you can't do that. You can't do that. Oh, but this is just how it's done in the industry. Just ignore them. Absolutely ignore them and find out concretely why you can't do it and find out specifically why you can't do it. This is the key. It's getting right to an old trainer of mine, a guy called Mark Kerwin, used to talk about screw balls. If you remember the ice creams when you were a kid. Yeah. All ice cream and then you've got your little... He talked about it from a sales perspective, but I think it's the same with innovation. Eat through all of the ice cream to get to the screw ball at the bottom, and you'll often find the screw ball is something quite innocuous. The problem you think you're trying to solve is not the ice cream, it's the screw ball. And if you can solve that screw ball, you've already got rid of all the ice cream. It's already gone. So it makes you more efficient. So I would just urge people to think of innovation like that. Not what is the high level issue we're trying to solve or that we can't, the thing we can't do. Solution it and then work out what the one thing is that's stopping you doing it. And then focus on that as the problem, not the high reaching one. Because I think it's what holds a lot of people back. Before they start eating the ice cream, they think, I'm not hungry. This is all about food. I really need to not do these straight after lunch. But they need to stop thinking we can't do this and stopping before they've even started. Because I think that's what a lot of people do. And I think in insurance, we're more guilty of it than any other industry. You can't do that because, and so often I hear those phrases and they're wrong. The reason that people say they can't do it is just wrong, but they've just convinced themselves. That would be my shot on innovation.
No, I think that's great advice and a good place to wrap things up for now. So, Ed, thank you very much for taking the time today. Appreciate it. And I'm sure everyone will find this really, really useful as well and valuable.
Thank you very much. Really good fun.
Thank you for joining me on this episode of Inside the Scale Up. Remember, for the show notes and in-depth resources from today's guest, you can find these on the website insidethescaleup.com. You can also leave feedback on today's episode, as well as suggest guests and companies you'd like to hear from. Thank you for listening.